This is your LMAX exchange technical update for Wednesday, November 15th, 2017. Euro dollar. So we had talked about consolidation in the euro between 16.90 and 115.55, and we needed to see a break for a clearer directional insight. And on Tuesday, we got a break above 16.90 with the market pushing up. And so this takes the immediate pressure off the downside. It doesn't quite force a shift back to the top side as far as expecting a resumption of the uptrend in 2017 just yet, but it does take the pressure off the downside for now, and it'll be interesting to see what happens from here back into a bit of neutral territory. Break back above the right shoulder of this head and shoulders top at 1880 would do a good job to pretty much rule out the downside and then get the market thinking about a resumption of the uptrend. So that's where we're at right now with the euro. The key levels to pay attention to right now, above and below, certainly on the top side, 1837 is a good level of resistance. That's the 26th of October high right here, which guards against the 1880 right shoulder high. And then you want to pay attention to the low that we had seen this week. So the low that was seen on Monday, which came in around 1638. So those are the key levels that you want to pay attention to right now. But certainly the pressure comes off of the downside with the market breaking above 1690 on Tuesday. Sterling dollar. Cable continues to consolidate. The market's been confined to this consolidation roughly between 30.25 and 33.40. We need to see a break. The possibility for a break that drops and takes us back towards the 27.75 area is certainly there, but ultimately the market should be very well supported, we believe, as it continues to show signs of putting in a longer term base for upside, a resumption of gains here, and an upside as it puts in this base off the 2016 plus 30-year low, and it has broken out from the 27.75 range high that had defined the top of a range for much of late 2016 into early 2017. So setbacks supported. There is the possibility and certainly scope for a drop in this market towards 127.75, but ultimately very well supported into a dip in favor of the next major upside extension back above the 2017 high, which comes in around 36.60. And towards 140 is that next major objective to the top side once we break to fresh highs. Dollar yen. So dollar yen consolidation this year, a lot of choppy consolidation, range defined between 108 and 114 roughly. Market has been showing signs of potentially wanting to stall out yet again into this range high, but confirmation will only really be given if the market breaks back down below 111.65. Breakdown and close below 113 is somewhat promising as far as the bearish prospects go and the prospect for a resumption of this range trade. But ultimately 111.65, this low over here, that's the low that we go back to when you look at the 16th of October to really strengthen the bearish case. As far as the top side goes, if we do see another push up to the upside, ultimately here we believe that the market still could trade up and then just drop back down, and until it trades convincingly above the 115.50 area, there still is this possibility for a range trade and false break to the top side. Euro Swiss has been very well bid this year, as we all know, the market taking out 110 and then 112, and so the focus here is on a push eventually back towards that 120 barrier that had been supporting the market for so long until up until January of 2015. So we're working our way back towards there. We do have that 2017 high at 117.13 from the other week, but the market could still see some short-term setbacks, of course. Only back below 112, though, would compromise the outlook for Euro Swiss. Aussie dollar. So Aussie has been under quite a bit of pressure since topping out by a 2017 high back in September. The market now sort of gravitating towards the 75 psychological area. Of course, the market has seen quite a setback, so we could see a bit of a bounce, though bounces are viewed as opportunities for lower tops and a continuation of declines, and only back above 79 would compromise the short-term, medium-term bearish outlook right now for Aussie dollar. Dollar CAD. So dollar CAD has seen a bit of a pullback since topping out into this most recent correction out from the plus 2-year low down at just shy of 120 back in September. But overall, there's still room here for additional corrective upside in this market as it continues to look to recover out from those plus 2-year lows and look for a higher low here in the 126 area. Ahead of the next upside extension back towards that psychological barrier, that important barrier at 130. Kiwi dollar. New Zealand dollar under pressure. Rallies continue to be very well capped here. The market is looking like it wants to maybe consider breaking down below a low that has been quite a tough one to break after the market had traded down to a 2017 low at 68.18 back in May. Then in late October, the market got down there again, but couldn't break that level and has since been kind of consolidating off that level. If we break down convincingly below 68, then it opens the door for a move towards 65. If, on the other hand, the market looks to reverse higher, it would need to break back above 69.80 to take the immediate pressure off the downside, though ultimately a break above 72 would be required to force a shift in the outlook and structure for a Kiwi dollar. SPX 500. The S&P 500 has shown some signs of exhaustion off record highs, and it's not a surprise with weekly and monthly studies where they are, but ultimately the market needs to break down below 25.44. At a minimum, a close below that level would be encouraging to take the pressure off the top side to maybe warn of a minor correction, but this is a market that, again, has been in such an intense record run that we would need to see confirmation for the possibility of a reversal, and small pullbacks are nothing to think about. Again, despite studies that do warn on a medium to longer term basis of a big pullback, 2,500, a break below there would maybe suggest that the market is finally looking to put in a top and see a period of extended weakness. But until then, fresh record highs shouldn't be ruled out above 2,600 towards, we're in uncharted territory here, so towards 2,650, 2,700, that's the kind of thing that we're looking at. Gold. So gold has been very well supported despite pullbacks over the past several months, always seemingly supported for higher lows or some form of a higher platform and then higher highs. So most recently, this pullback towards the 1250 area has stalled out in the 1260 area, and the market could be looking to put in a higher low again in favor of that next major upside extension beyond the 2017 high around 1357 and towards and through the 2016 peak at 1375 further up.